Welcome to Stockradar Stocks on the Move. Today's date is the 16th of September 2021. Today we strip it back to basics with our focus on trends and new highs for simplicity. That's what I do. My name is Richard Lee and I manage the stockradar.com.au website for you. Educating members that identifying stock picks is only a small part of the trading process. We need to acknowledge that a carefully crafted methodology of managing a portfolio of stocks is what's needed to get you there, to get you over the line, and that's where we want to take you. So that's what I try and do. That's what I try and help you with. So first we're going to go straight into the markets. Let's have a look at our normal portfolio. We'll go through the overseas markets, look at the ASX 200, look at some Australian stocks for you, and then we'll look at trading tactics. It's not so much about any condition at the moment, it's really talking about how we approach it. And simplicity is the key. And I know lots of people talk about this, but it is key when you're doing this and it makes life a whole lot easier. And I'm going to take you through that with trading tactics this week. But first off, we're going to go to the markets. Of course, the Dow Jones, again, it's an eerie climb, but the uptrend holds. This is still going up. We're all sort of wondering how this is continuing to happen, but it is. So we just take it at face value and we just follow it, okay? So as nervous as we may seem, it continues to go up and there's no real signs there of anything untoward at the moment. And we look at the Nasdaq. It's similar, it's just making new highs again, above the average, volume solid, the MACD is well up there, so all key parameters are positive at the moment, so no concern at this stage for the Nasdaq. Okay, we'll look at the commodities again this week. Brent crude, it's having another go. Okay, now we've got this resistance up here, it's a big resistance level up at about $80, and we've had a correction down here and it's come back pretty strongly. Not that there's a lot of volume in here, the MACD still stays in a positive area, but this is a big resistance area to get through. If it does, well and good, we may well see some more moves higher, but for the moment it's going to have another test and we'll just see how it performs. And I know our oil stocks are doing pretty well today, which is nice. Okay, copper, it's also in that pressure situation where we've said it's been a good trend, but it's come under some pressure here recently, and we can see now, I'm just noting today, we've got this lower high here, we've got the support that's holding at the bottom here. The volume has sort of been declining throughout this, which suggests this is a corrective phase and not an aggressive selling or profit taking stage. So after a big rally that we've seen like this is quite normal, and it's actually a good thing to consolidate these gains before we see another push up through R1 and onward. For the moment, we wait and see and just let it evolve as it will. Okay, gold, a little bit, you know, it's still going sideways, but I have noted the last sort of few periods we've seen this, you know, this slow rise into a high point, then the expectations get popped, and down it comes, a slow rise, expectations get popped, same thing again. So we're just seeing these downside ones, these real drops, climb, these real drops, and that's a bearish tone. So I'm still looking for this S1 probably to be tested at the moment. But you know, it is holding up, so we'll just, it's sort of in neutral, and I don't really know sort of stage at the moment. So gold is something to watch for the moment rather than do anything there. Okay, now let's get into our market. Now our market is looking pretty good still, although the last couple of weeks we've come off a little bit. There's been a couple of down weeks there. Last week was a down week, but we still are holding this uptrend. So you know, while it holds, we're not too concerned at the moment. We're seeing the Stockradar portfolio was down 2 this week, 284, just 2 stocks out, none in, of 189 covered, 168 stocks and 21 ETFs. I'm going to have a look at a couple of ETFs a bit later on. The portfolios are full. The 5 stock is full with 5 stocks. The 10 stock is full with 10 stocks again. And the conservative portfolio is 8 out of 20 and just humming along nicely. Our sectors, well, that property has moved to the top. Banks are second. Industrial materials are third on our trend intensity rating scale this week. So, you know, it's interesting to see how these are performing. But they've been up there for a long time. That's been a really strong part of the market. On our own portfolio, our portfolio, which I showed you last week, it's up 16.3 since March, which is pretty good. This is no doubt a strong period for these stocks. It doesn't always happen, but this is the way it is, and when it does happen, you've got to make some money. So portfolios will go through flat spots, and they will go through surges. At the moment, this one's having a little surge, 16.5% up since March. Strong period for stocks. The stocks I've got in there are Sol, Washington Sol, Computer Share, Independence Group, Car Sales, and now WiseTech's in there as well. So So it's an outperforming level where we money manage the trade. So IGO has now got to a level now where it's been such a good rally. It's now starting to do what I call outperforming gains, which are generally what you see every year. If you get a 30 or 40% gain, that's what I call an outperforming gain. So we're always going to take some off the table when that happens, but we're still going to run with our main position in that portfolio. So it's how we manage our trades to a certain degree. Okay, so that's the portfolio side of it. That's our index. That looks okay for the moment. So now we're going to get into some stocks. And firstly, we'll go to our favourite, JB Hi-Fi again. Just having another look at JB Hi-Fi. You know, it's come off down to here, this S1 level. It's been struggling for quite a while. We know there's pressure on S1. Volume here, there's some heavy selling through this period here, and the momentum is slacking off here, and this is a new higher low. Everything looks a little bit off for JB Hi-Fi, and it's not responding to good news, which I don't particularly like. So I have got a trend intensity rating of -10 on JB Hi-Fi at the moment. So that's a pretty negative rating. So we don't see really much upside at the moment. Not that we know, but it just tells us we're not going to play in this stock at the moment. We're going to let it go till we get that evidence of a trend or a new high, which is what we like. So that's JB Hi-Fi for the moment. Washington Soul Patterson. I'm going to go through some of these ones from last week. I'll go through these because these are the stocks where you make money. We're always looking at these big stocks, the big trends, and that's where you make your money. So we're looking at Soul Patterson now. It's only just started. It's taken a little while to get on its spike, but all indicators are flashing green, and it's still a trend intensity rating of 10. That's as of last week. This week, well, we'll see what happens at the end of this week, but it's up 30%, nearly 30% since entry, and that was back in March of this year. So that's okay. So Soul Patterson, and we look at the volume here, we look at the momentum. These are the stocks to focus on, okay? So the next one I want to look at is South 32, really doing what a lot of the other commodity stocks aren't doing, like BHP and Rio, although some are, like Independence Gold. But South 32's had a good run. It's had a good run from down here in November last year, and now we've got a little bit of a surge here, which has been interesting, a little power thrust higher, and also an excellent volume and momentum. So this stock is looking very good. So again, it's one of these things you would think, oh, should I take some profit now? Don't take any profit now. Everything's in green. Wait till it goes higher. Raise your stop is how you play these ones, okay? And Domino's, a similar thing. We saw it last week, but again, it's had a great week again last week. We've just raised the stop again. So it all looks good. And again, we can see down here, there's great volume, great momentum. This is where we started our position. Again, we talked about expensive here, not so expensive now. Okay, here, we just don't know, but we've got to play those odds because often it will jump, okay, and it has jumped at this stage, a bit like WTC, which we'll have a look at in a minute, but these are really is the power thrust where we get these big momentum moves. No matter what the fundamentals are doing, the price is going higher, and that's what we like to see. Okay, Brickworks, another one doing a really good job. We've had a good move up here. We've had a little flag, a little corrective flag here, which is now broken out of. And we can see a little bit of volume here. Momentum is just ticking up again. So it all looks good for further rises. As of last week, the trend intensity rating had moved back to +7, but I would suspect it would move straight back up to +10 this week. But it does look good. So we've had a good impulse wave, a drift. An impulse wave, this is the characteristics of a trend, and it gives you the confidence factor that you should still be in there. Okay, the banks have all done 30% this year, which has been fantastic. And here we've got NAB, and they've actually, a couple of them are just like ANZ, I think, and NAB, just had a little bit of a sideways move here, a little bit of a consolidation at this stage. No real aggressive selling showing here, just a slowing of momentum. So no real concern unless your stop goes off. In this situation, our stop didn't go off. So we're still in this stock, and we're now getting another little rebound off at S1 level at around 25.60. It's up around $28 at the moment, and trend intensity rating is +8. Everything is steady here. I can sort of squeeze this up a bit for you if you like, but there's nothing really concerning here. So when the trend is intact, you don't doubt it unless you have evidence. Okay, so although the momentum's, it's above zero, it's a bit sluggish, volume's a little bit iffy, but the price is going high, and that's all that really matters to me at the moment. That's my main thing. So that's NAB. It's doing pretty well. Okay, some recent entries we looked at, just again, because sometimes people get nervous about pulling the trigger on new highs. Well, trend intensity on this one is 10. Technology one has broken up through a massive resistance level up here, which was now going to hopefully support any pullbacks. It's had a great rally here again. We were up again last week, we're up again this week. You can see the volume, the momentum, all saying green, 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 go, go, go. So they look fantastic. So really what I've just got a picture of a few stocks where they're really doing really well, and that's what I like to see and focus on. And a lot of the stocks that aren't doing it, I don't worry about. Okay, Macquarie Group, another new entry which is starting to move a little bit exponential, which is what happens sometimes when they first start off. We've had a big rally through the high here. Trend intensity rating is 10. You can see the volume here. Momentum is starting to expand. It's above the average. Where will this one take us? Well, we never know, so we just follow with the stop loss. So Macquarie Bank is looking hot, hot, hot. And it's also doing pretty well. So next one I want to look at is a little energy stock called Whitehaven. We had a couple of tries at this stock when it was bottoming out, and we got stopped out a few times. But now in this trade here, I think we've got upwards of 40% in this trade since it moved above 179 back in June. So it's had a mammoth rally since then, and it's looking very good with the high low here, big reversal pattern here. We've got great demand showing up down here. Crowd power is pushing this stock higher and higher. Okay, coal is back. Well, go figure. I don't know why, but that's what's happening. So the market always surprises us. So we've just got to be careful, be observant, and don't look for reasons for things all the time. If price tells you something, then you just follow it. Okay, and if it is wrong, it will stop you out because we're always protected. Okay, but if we can get onto a move like this at 40% in a couple of months, that's really what we want to do. Okay, and another one is a recent entry, which is Downer. It's, I think we did look at this one last week. Again, it's just had a little corrective pattern here, slow build-up of demand. But what do I like about this push here? I like this down here. This is great demand, great support for the stock. It's not going to come back in a hurry, I wouldn't have thought. Not guaranteed, but unlikely. Again, those odds are this is going to go higher. So I just hang into this one. I raise my stop. Momentum's good, volume's good, and that's giving me green, green, green lights for Downer EDI. And the other one we did buy, which is, again, considered maybe expensive by some, but expensive only in the eye of the beholder. So I'll just have a look at this one, just blow this up a little bit, squeeze this up a little bit for you, so as you can see what's happening. Okay, so we've got the big resistance level we know, which was broken at R1. It kicked up through, which is around about $38, and it's now just gone bang, 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 higher, higher, higher. Standoff, standoff, crumbling exciting times ahead. So this was the first level here, which really gave us a clue, but we did wait conservatively for this to break, and we've actually bought it up here. So that's the way it is. In my world, I have to do these things because I've got clients in my back saying, well, why didn't you do that? Well, I've got to do these things, and often it works out okay. So I'm not fazed by these numbers. I'll just do what my system says, and it says go ahead with this one. So that's looking okay. And again, we can see the volume down here. If we squeeze it up a little bit, you can see a bit of volume, and you can see momentum all looking good, well above the average. So it's got just the simplicity of what I do is really handy. It just tells you yes or no, and there's nothing really to worry about. I don't put in PEs. I don't want rate of returns. I don't look at all this sort of stuff. I look at very, very simple key parameters that are important to me, and this is what I look at in price. Okay, so that's really most of the stocks I want to go through today. What I will do quickly is go through a couple of ETFs, which I've just really added to Stockradar. And I don't have positions in them at the moment. I'm just giving you a trend intensity rating and an idea of whether they're trending up or down and how strong it is at the moment. So I'll just go through a couple that I've got here. Firstly is the Japan Etf Hedge this week, which just started to break through. Didn't quite give me a signal last week, but started to break through these highs up here. And its trend intensity rating of 3, and it looks like it might be about to move into a trending stage after this good upward move and a correction. Now, what we like about ETFs is they trend very well and very easy. They're not too jagged. So you can see the simple trend here, went into corrective phase, and hopefully we'll get another trending phase here. I'm going to look at a couple more in a minute, but that's the Japan ETF currency hedged. Okay, now we can look at the general global robotics and artificial intelligence ETF, trend intensity rating of 10. Again, it had a bit like the Japan hedge. It had a good trend. It had a correction phase. It's now broken higher. And again, if we go down here, we then see the volume, and we then see momentum, and we see it's above the average. So it gets a trend intensity rating of 10. So it's looking very good at the moment, and it's rallying very strongly. So that's that ETF. And the next one is the India Quality ETF. Again, this has been trending very nicely. Trend intensity rating has been 9. Little corrective pattern through here, but generally the trend has been very, very good and very, very easy to read. And again, we've got volume down here. Momentum is okay. Now here you've got a big red bar, which as we know is a down day. Now the down day really was this little one here, the down week. So really all that selling had very little effect on the price, and that's a really good sign to me. And that means it's being absorbed by the buyers and it's probably going to go higher again. That's not a guarantee, it's an odds thing, and that's what I look at. So the ETF on India quality looks like it's going to continue to trend higher. As I said before, these ETFs do tend to trend very, very well. Okay, so that's the charts I want to look at today. I just want to really want you to focus on having the confidence to take the signals when you get them. You know, whatever your trade plan says, and it should be simple and it should be easy to read, it's easy to focus on. When it tells you to go, that's when you go, no matter what. Okay, so some of the biggest moves are momentum moves. Okay, not necessarily the buy and weakness ones, but the biggest moves, the sharpest moves, can be the momentum ones. And the stock that I've showed you today, whether it be Domino's, Washington Soul Patterson, South 32, they're all doing it. Okay, so now I want to go to trading tactics. Okay, now I talked about simplicity today because you know that I have 2 entry signals and 1 exit. The entry signal is either a trend reversal or a new high, and the exit signal is simply a stop loss when it starts off, and hopefully then it becomes a stop profit as it moves into profit, and we just keep locking in that profit as it goes higher. Okay, we just keep it tailing behind, nice little bit of room, a little bit of breathing space, but that's what we do. So we just try and keep all this very simple. And I'm going to tell you a bit about why I do this today. Okay, I strip it back to the basics, really back to the basics. Price is really what I look at, and I have a couple of indicators to help me. Okay, it simplifies and promotes consistently positive decision making. I know there are probably 2 things in this world that traders find a problem. One is discipline to take the signals, and the other one is to money manage their positions properly or their portfolios properly. And that's what I'm always trying to educate people on, and how to do this sort of stuff. And the portfolio membership that we have does exactly that. Okay, so the Stock Pick Basic membership gives you all the stocks, what's trending and what's not, but then you've got to combine them into a portfolio that actually functions even better. So that's what I do, and that's how it works. So I go back to the basics. This simplifies and promotes consistently positive decision making, and if you can do that, you're really well on the way. Okay, it is ease of use, it's ease of focus, and ease of decision making. That's the why. It increases the odds of getting it right. Okay, less room for error. Focus on the frequently occurring trends and new highs. Trends and new highs. That's what we always want to do. We want to see prices move in one direction. That's what I'm always trying to isolate. When is a breakout going to occur from a trend reversal or a new high? And then I trade it, and I behave the same every time. I take the signal and I use my stop. It's simple to follow. What I do is simple to follow. What you see every day, what you see every week is very, very simple. Simple format, simple process. Okay, really an uptrend is defined as, this is my greatest filter that I can have, a series of higher highs and higher lows. And you notice sometimes when I get the high, like the Brent crude or copper, we've got to rally into a lower high. Now when it creates a lower low, that's a big concern and probably a trend change. So an uptrend is defined as a series of higher highs and higher lows. And if you've got that in the stock, the chances are it's going to be higher next week than it is this week. And on an odds basis, that will be true most of the time. Okay, so that is the uptrend. Okay, look at one stock, which we haven't looked at today, is Aristocrat. Trend began at $27 back in about a year ago. So this has gone from $27 and it's nearly at $50 at the moment. It's about $48 in about a year. So that's a series of high highs and high lows right through the trend there. Take the price to $48.19 as of yesterday. So far that's 78%. That's not even including dividends. So that's what we do. We always shoot for these ones. I'm always shooting for the big ones, but always holding with these trends takes steady resolve, because we're always keen to, when we've got a lot of profit in the bank, to take profit. You can take a bit of profit, but always make sure if a trend is intact, you still remain exposed, because the chances are it will go high. Sometimes it will stop, of course. But if you can get as much out of a trend as possible, that's what we want to do, because we can just see these trends that extend. And when we bought Aristocrat back in that time of the year, it was, a bit uncertain, as it always happens with the trend reversal, but it's gone on to be a star performer. So, what you need to do and what it does, the simplicity and the focus gives me, I have belief in what I do, and it gives me confidence to take those trends, to take those signals for me, okay? And that's really makes life a lot easier for me. There is no secret, you just do it. There's no holy grail, there's nothing hidden behind anything, there's no secret algorithms or anything. It's just a simple plain format that I use, so just do it. Okay, right. So that's really what I wanted to talk to you about today. Keeping it simple and focused means your analysis will only require about 10% of your time. It's a small part of what I do. The rest is being disciplined to enact your money management program in a skillful and timely manner, as you should do. Okay, then you enjoy. And that's how it works. Okay, you can take a free trial of Stockradar and see how we run our quant process under a banner of safety. If you don't allow yourself to take big losses, you won't. That's how we work. So good luck for your trading this week. I hope you all learned something today, and I will see you all again next week, and who knows what the market will throw at us next week. Okay, thanks a lot and bye.